Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our quick weekly recap for January 29th through February 2nd. I'm going to try and make these a bit faster. I won't cover everything that I normally cover. I won't go through like a whole article, so let's go ahead and get into it. I'll try to make this video 10 minutes or less. So some of the articles that were posted over on Facebook were talking about Keurig is buying out Dr. Pepper in 2018. I don't know if this will go through this year, but that'll create a very huge beverage company, one that can compete with Pepsi and Coca-Cola. Dr. Pepper was one stock that I had considered a long time ago. Coca-Cola, Dr. Pepper, Pepsi, they were all great buys. Looking through them all, I thought Pepsi was the most diversified one. They are not just a beverage company, and they have great beverages. I drink Pepsi here and there, not all too often, but if I do drink a soda, it's probably some sort of a Pepsi brand. So I thought that was an interesting article. Talked a little bit about how firms such as Fidelity, TD Ameritrade, Morgan Stanley are all kind of, they've had to adjust their fees in order to kind of compete with Vanguard. So they're going to try and make it so it's more expensive for investors to invest in Vanguard through these platforms. And a lot of times, if you are not invested in a Vanguard fund, you will be paying a much higher expense ratio than if you had just looked at a Vanguard fund that tracks some of the same stocks as other fund would. Goldman Sachs, we covered how to create your very own 1.5% high yield savings account. If you have $1,000, $5,000, $10,000, that could increase your savings per year by $14, $74, $149 depending on how much you have invested, and it definitely beats traditional bank of say 0.01, 0.04. So I made a video on that. This article came out about Amazon, Berkshire Hathaway, JP Morgan are setting up their own health company for their staff. So that affected pharmaceutical companies. Some of my companies that were affected are AbbVie and Pfizer, Intel, EPR. These are just other ones that continue to kind of bleed out. Intel already had a great week last week, up 8%. And kind of talk a little bit about that, how EPR has been hurting due to the rising interest rates. That's just mainly REITs and utilities. And see here, I released my video with five stocks with ex-dividends next week. Monday, Tuesday, there were all red days. Took a look at the after hours. If you take a look over at CNN after hours or Market Watch after hours, you can see the U.S. stock futures. You can also see some of the trading activity taking place after hours, and you can kind of predict how the following day is going to go. So Wednesday, it looked like it was going to be positive with the S&P, NASDAQ, Dow in the green. So it looks like we're going to be ending the very last day of January on a green day, and it was. I released my video with 5 stocks with ex-dividends on Wednesday. So that came out. Talk a little about how a financial advisor Ponzi schemed $1.2 billion out of 8,400 investors, many of which were senior citizens. So I know Ryan and myself always, we encourage people to open up their own self-managed Roth IRAs. That should be the very first account that you guys should be opening up instead of your guys' Robinhood accounts. I know I talk about Robinhood. I think Robinhood's a great platform, but your first $5,500 should be going in and investing in, should be going and investing in a Roth IRA, as all your capital gains, dividends, and appreciation interest will be 100% tax-free. Talked a little bit about FinViz. This is just a 1 month performance for the year. You can see this basically just covers kind of 2018. Apple's down 6.81%. They did not release. Actually, they released good earnings. Their future is looking, people didn't like what they said about their future stuff on their sales, so they did drop quite a bit there. I bet they went down like 6% this week. Exxon, Chevron released some bad earnings. That caused the Dow, they're in the Dow, so that caused the Dow to go even further with the Exxon and Chevron kind of following, making that. GE, it's kind of bleeding out. So you can see a lot of red over here, but this is just a 1 month chart. So a lot of stocks are really green still. Amazon, huge. Boeing, AbbVie, you have Guild, which is, healthcare REIT, I believe. United Healthcare over here, CVS, still very positive. CVS was at a great discount just a few months ago, or maybe even still now. Coca-Cola up, very nice. Pepsi still up for the year. Nike up 6%. I know that was down huge. Triple N over here. I know my buddy had picked up Nike just because he likes the shoes, so he picked some of it up. We have Google, Facebook, Microsoft, AT&T, Verizon, all of these, Cisco here, IBM, Intel somewhere probably on there too. But a lot of positive stocks in technology. I'm a technology-centric investor. I like technology, so I invest quite a bit in technology. Financials are very positive. JP Morgan, Bank of America, Wells Fargo, Visa. These are not financials, but they're credit cards, credit card related. PayPal, what was it? eBay said that they're going to be cutting off PayPal, so that caused them to kind of fumble back. Berkshire Hathaway, so very nice across the board for the month. So lots of positive stocks, so nobody should be freaking out because there's still lots of people that are probably very positive right now. I have my Robinhood account trolling me over here, so I'm up 8% on my Robinhood account. I only track one stock inside of there. It's a bank stock, I believe. And let's see here. Now, kind of going over the weekly news. So if you go over the Merrill Edge, it's free to sign up. You don't have to have any money in the account. You can still take advantage of their research tools. You can take a look at their weekly wrap. This is something I read every week. Goes over the indexes, goes over some of the stuff that took place. So indexes here tumbled this week. Dow Jones down 4.1%, S&P 500 down 3.9%, NASDAQ down 3.5%. I know people, CNBC announced that the Dow Jones is down 700 points. They actually are down over 1,000 points, almost 1,100 points. So very big pullback. Going into next week, I can probably see Monday being continue, not as big. Maybe I could see like a 0.5% if it does kind of continue. State of the Union took place this week, talked about employment situations report for January. Treasury yield did help strengthen the case for the bears. So technology, a lot of technology companies released their earnings. Apple, Microsoft, Facebook, Google all released their fourth quarter results. Some were better than expected, such as Google. Actually, not Google. Who released some good earnings? Apple released pretty good ones, and Amazon released some good ones. So Amazon jumped up huge after earnings, almost 6%, and then kind of fell back into the 4% range. Apple, they released good earnings, but their future, they're saying their sales are going to be cutting, or the production was going to be cutting their iPhone 10s by half, and kind of not continuing it, I believe. But that caused them to dip. So we have Microsoft, Google, and Apple. Microsoft down 2.4, Google down 5.8, and Apple down 6.4 for the week. And then Facebook does advance, touching all new time highs. It kind of went on a little bit more about jibber jabber about the iPhone sales. Facebook beating their earnings and revenue, the way that they're kind of changing their ads. They're no longer doing crypto, but they're doing some other stuff in there that wasn't in here in this article, but they did talk about their ads quite a bit, and that kind of helped them out. And that was basically it as far as, talks a little bit about how healthcare sector is struggling, losing 5% after the Amazon, Berkshire Hathaway, and JP Morgan announcement on Tuesday. So this won't take place for, say, another 2 or 3 years, I believe, but it will make some sort of an impact. So I may look at JP Morgan. That's a great financial company. I wish I had invested in a long time ago. I think my very first video talked about inflation, and if you had invested your money in JP Morgan instead, you would beat inflation plus be up a very nice amount. So that was like my very first video. And that's basically it. Kind of talks a little bit about the Treasury notes. Spiked up a little bit, 2.85% this week. They raised interest rates. I don't know if that's in here. So the recent rise to Treasury took place, and a couple other things. So you guys, let me just screen it. You guys can stop the video, read through the article, and take a look at that. Now, next thing, I wanted to kind of showcase you guys some of the trending stuff. So if you guys go over to Merrill Edge, go to research, go to your technical analysis tool, and then click on technical insight. And if you guys track the S&P 500 at all inside your portfolio, say the SPY or the VU, I have the VU inside my IRA, so I'll go ahead and say the VU. But if you just looked at the short term, this covers 2 weeks through 6 weeks. You can see that there was a lot of indications here that were indicating a bearish move. So here, as early as January 25th, the inside bear showed bearish. This other one here showed bearish. Then there was a drop. There was a gap down. There was a huge gap down. This was Monday. Then they had another on continue down on Tuesday. It did have a nice, I wouldn't consider it very nice, but it did pull up a bit Wednesday, Thursday, and then Friday. Look at that drop here. I can actually zoom in here. So right there. Let's see, this is momentum. The momentum built up. People were starting to take their they were taking their profits. So just a very, and it has some little things there. So I'll click through them. Bullish events. You can't, it could be interrupted, but it's not going to. So it dropped below 80, then rose above. So it kind of goes over this, some of the information. But a lot of this information you can see here, just using the tools here, it predicted, some of the bullish trends kind of going forward. The last time that there was a bullish trend was back in 2015 July and 2016 July. Between 2015 July and 2016 July, it was very rough waters. I don't know if I can go back. Actually, let's go to Google and just look up. I'll look up SPY stock, or actually index. I think that will show me the index. And if I go over 5 years here. So here, January 26 and go down 3.88%. If you go right here in between 2015 and 16, in like this July, okay, so it was August, but you can see this pullback here is around, 8% was the biggest one, and then it did slightly recover, trended sideways for a while, and then fell an additional 10, it fell down near 10% again, so you would have lost, a little bit there, but it did recover and continue going sideways. So if you guys are invested in a dividend stock such as myself, you may want to continue to hold out and see how it does go. I'm pretty sure this will just kind of pan out and kind of continue along its way. It's nothing like this sharp drop right here, but we don't know. Who knows? It's unpredictable. So what else here? Weekly trades. This is kind of be ending now, so I'm just going to go over like 2 little screenshots here, and this is basically just kind of weekly trades and dividends that were paid out to me in the very, this week. So IRA, I moved over my 401k from my old company into an IRA here. I was kind of deciding what I wanted to invest in. After Monday, Tuesday, I wanted to, or actually, this came into my account on Thursday. So, or maybe one of those nights, Wednesday, Thursday, somewhere around there. I got paid out a dividend from AT&T, got paid out a dividend from Verizon, so that was nearly $100 right there inside my cash managed account. And bought some more shares of WP Carry. I bought a share of AT&T. Oh no, AT&T paid me out a dividend here, $8.50 inside my Roth IRA. So these are inside my cash managed account. So I made $100 there roughly, and then I made $8.50 inside my Roth IRA. I used some of that money inside my cash managed account to buy 2 shares of Entertainment Properties Trust. And then I used some of the money from AT&T and some of the other money I had in there from my dividends from Edison International to buy 3 shares of Ford, because I was down in that position inside there. And Ford, it'll recover here in the year. It's not gonna, I don't believe it's gonna continue to trend down much further than this. I think it's bottoming out here soon. It should be hitting their support and begin trending back up here shortly. So I'm still invested in my dividend stocks. I'm still averaging down. I am down in my positions in EPR. I'm not down in too much, but that does help. When I'm able to average down and buy stocks at a cheaper price as of today, definitely helps me out. You can see here that inside my IRA, I made purchases into the VOO ETF, which tracks the Vanguard 500 index, and then I also bought the Mega Cap ETF, which tracks a lot of the mega cap companies. It has some of the same companies as the VOO, it does have a higher yield, so there's more dividend stocks inside of there. This was rolled over from my 401k. Inside my 401ks, my Roth 401ks, I like to track indexes. So I continue to do that. So I bought 2 indexes. I didn't know if I wanted to buy VU or MGC, so I decided I wanted to invest 25% into each, but I did my math terrible and I ended up buying the complete amount of half and half, which really screwed me up because Thursday I purchased these and then Friday what happens? The market goes on sale, so I really messed out and did my math wrong. So that's, it's whatever. It'll recover next week, so I'm not too worried about it. But I was able to average down, was able to buy in those positions, so that did help my yearly income here. You can see February until January of 2018 till 2019. This is just a yearly estimate. This is just pulled today. So as of 2/01/2018, I am scheduled to make around $2,800 in dividends as the dividend investor. That's kind of like my goal. Even if stocks are tumbling down, I can use these dividends. I'm making $200 in dividends every single month, plus capital appreciation. I don't lose money if I don't sell anything. So as long as the stock appreciates, reappreciates back to where it was, it can go on a downtrend. That just gives me the opportunity to buy more of it at a discount, giving me a higher yield on cost, giving me a better, as long as I invest in stocks that have been paying out dividends through recessions, I know that their fundamentals are good. I know that their balance sheets are squared away and they're not going to be, bleeding out during these recessions. They're going to have money to be able to pay out dividends to their shareholders. So not a problem there. 90% of my stocks have 10 years or longer of just continued dividend growth and just have paid out through recessions regardless of what the economy does. So that is it. As I reinvest the $200 every single month, that should increase my dividends per month for the following month by roughly $6. So by the end of 2018, I can expect to have around $3,000 or more in dividend payout. And if the stocks do continue to kind of fall down here a little bit, that's fine. I don't have any issues with that. I don't really need the money anytime soon, so that'll just give me some better buying opportunities for my dividend stocks, and that's basically it. So hopefully you guys have found it interesting. If you guys did like the video, I tried not to make it too long. I said 10 to 15 minutes. So if you guys did like the video, hit the like button below. Thank you guys for subscribing out there. If you have not subscribed, go ahead and hit the subscribe button. I make these videos weekly. If there's something you guys would like me to cover other than what I covered today, go ahead and let me know in the comments below. I'd like to fine-tune any information that I'm putting out for you guys to what you guys would like to see. So that's basically it for this video, you guys. If you guys have liked the content, remember to like, subscribe, leave a comment below. Thank you guys for tuning in. I will see you next time. Have a great day, and hopefully you guys buy something on discount. Bye-bye.